Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. We're going to take a look at the sterling versus US dollar. It's moved sharply to the downside, and we move back to a very familiar place. I'll show you what I mean in this video. All right, looking at the hourly chart here, and everyone's very familiar with this chart by now. This area right here represents the ups and downs that have been confined to pair going all the way back to mid-December, maybe just before mid-December. Admittedly, we did have a move to the upside here, which was fairly short-lived. We also had a little bit of move up down here, which was very short-lived. But over this whole month and a half of trading, the price has been up and down, up and down, up and down. In between sits the 100 and 200 hour moving averages at the 127 level. By the way, this range goes from about 126 on the downside to 128 on the upside, so about 200 pips. And again, the 100 and 200 hour moving averages are in between those levels at 127. And you can see all the moves up and down, above and below those moving average levels. But today, we did have the non-farm payroll, and we fell below those moving averages and continued its move all the way down to the high of this yellow area. The high of this yellow area is what I define as the swing area from all these different lows going back in time. The low of the swing area, we had all these different lows. Admittedly, we went below the level here, but then reestablished support here. And we moved back to the high of the swing area today at 126.13.7. And what do? We found support buyers were already trading up about 20 pips off of that level at 126.33 at the moment. So the dip buyers came in on cue, pushing the price to the upside. And as we go forward into the end of the day and into the new trading day, what will we look for? Well, if you're a believer that it's about time we get out of this range, what I'd look for is at this area right here around the 126.47 to hold resistance. This level was the low right here. It was a low right here. We moved a little bit below it here before rotating quickly to the upside. And even in trading yesterday, the price sort of stalled around the level before breaking below that level to the 61.8. And then we got back above it here again after breaking below that level. I don't know. It's just, if we're going to see a correction, I don't want to see it go too far. So let's put a lid on it at 126.47. If the price could stay below that level, then I think what we'll see something like this, where the price goes up there and then rotates back down through the 61.8%, through the 126 level, and then moving down toward the 200-day moving average. That 200-day moving average comes in at 125.606, and we'll see what happens down there. But it's time that we get out of this, isn't it, folks? It's time we get out of the red box and look for a further downside momentum. If so, watch the 126.47 level as resistance now. That's my technical look for the sterling versus US dollar as we head into the weekend and head into the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.